On Business Incorporated today, U.S. Prosper Africa Initiative begins as Deputy Assistant Secretary of the Bureau of African Affairs begins a tour in Nigeria. Petrol scarcity persists in Nigeria. Zimbabwe eases COVID-19 rules, reopens all entry ports. Hello and welcome to the midweek edition of Business Incorporated here on Channels Television. I'm John Mekwa. We start as usual with market numbers, and we see here on the African continent, South Africa's JSE advanced 0.69%, while Nigeria's main index is marginally up 0.1%. That was at intraday. Egypt's EGX30 was higher, 0.44%. However, Kenya closed Tuesday's session negative. And over in the Middle East, investment sentiments were also mostly positive at intraday. Dubai's index recorded the highest gain. It was up 1.31%, while the Abu Dhabi index increased by 0.68%. Elsewhere in the region, the Qatari index added 0.25%, while the market in Saudi Arabia saw a 0.74% increase. And this was all at intraday. Let's go to Europe now. Markets and businesses in Europe may be breathing a sigh of relief after Russia signals de-escalation in its military build-up on the Ukraine border. But we have Stephen now joining us from Berlin to give us more and reactions to this. Well, Stephen, there's still lots of questions about Russia's plans. Markets seem to be relieved, however. What else can you tell us about this?
Indeed, what we saw on Tuesday was that as soon as those early reports came that Russian troops were beginning to move back to their bases, we saw gas prices already falling at that point, and they continued as Russian President Vladimir Putin confirmed that he was interested in more talks with Western countries. We also saw that oil pared back some of its gains that it had seen in the run-up to Tuesday. And also we saw that markets across Europe, in London, Berlin, Paris, that they all actually improved on the day, which was a defiance of expectations. Futures at the beginning of Tuesday's sessions had suggested that they would fall, but again, that sigh of relief. Now, of course, we should mention here that this is a very volatile situation and that things could always change within the hour. There is still a concern that an invasion could still take place, and of course, there are signs that are worrying, such as a number of cyber attacks in Ukraine and within the Ukraine military. So those are signs that investors will be watching. They will be watching how things develop, and the first things that you're going to see, as we said yesterday, you're going to see changes in the prices of energy, and that's gas and that's oil. We have to remember here that Russia is the largest single provider of gas to both the EU and to Germany, and that's a very important point when looking at markets right now.
Yeah, well, a welcome development there. But looking closer at Germany now, it's had some of the strictest coronavirus measures in place. Now it's talking about loosening them. What could that mean for Germany, Europe's largest economy?
Right, everyone here in Germany is going to be watching the results of this meeting today between leaders at the national and state level in Germany. Now, there's several things going on right now. It appears that the Omicron wave has peaked, although case numbers are still high. However, there is about a month more left in which the government can keep those tight restrictions on with support of the states across Germany. And so what we're already seeing is talk about loosening those ahead of time. Now, what could be in play here is things such as increasing the number of fans that can be in football stadiums, opening up cultural venues such as theaters and cinemas, and of course a more coordinated relaxation of strict rules on who can come into retail businesses. Right now, many of the rules across the land still require that someone be either vaccinated against COVID or that they be recovered from the disease. A lot of the intent going into that was to encourage vaccination, to increase vaccination. Businesses, however, have complained that it's come at their expense and lately they've been successful in court, and that's put a lot more pressure on different states to either pare back their rules, or they've been forced to overturn them completely after successful court challenges by businesses. And so now what we're going to see is probably a more coordinated approach to address some of those issues and to perhaps bring those rules back. What we won't see, however, is a change in basic hygiene regulations. That includes masking, that includes distancing, for example, in public spaces. And then, of course, on the radar in the coming weeks and months is going to be this question of whether there's going to be a general vaccine mandate for the German public, and that's a very controversial issue here.
And one sector that seems to still be struggling is the car industry in Germany. Some newly released figures shine light into problems. What can you tell us about this data and what they actually mean?
That's right. Those new figures from the National Statistics Office showing that employment in the sector pared back 2% between December 2021 and December 2020. Now, that was the biggest retreat in employment for a single manufacturing sector in that time period. And it actually follows a 3% retreat between 2020 and 2019. So what we're seeing is definitely an auto industry that is at overcapacity and that is trying to adjust. And the problems here are both short-term in nature and they are long-term. They're short-term because there are some very serious supply shortages that have been hitting the industry, in particular in computer chips, those computer chips being very necessary, dozens of them actually, for modern cars at this moment. And what we're seeing is that since the pandemic has hit some of those supply chains pretty hard, that those chips have been harder to get, and so many manufacturers have pared back their production lines. But even in the long term, there are some capacity issues because the manufacture of electric cars, which is going to speed up in the years ahead, it actually requires fewer workers than cars with combustion engines. So there is going to be a long-term trend of overcapacity and the industry having to right-size itself. So this is something that's very much on the political radar. It's very much on the industry radar, and it's coming from all sides, you could say, for the German auto industry right now.
All right. Well, I think that's much we can take. Stephen, thank you so much for joining us and giving us an update from Berlin. Enjoy the rest of your day. And from Berlin, we move to the UK. Well, attention is still very much on inflation figures, which is at a 30-year high. No thanks to rising energy bills, even clothing and footwears. Well, we have Juliana joining us now, as usual, from our London studios. Hello, Juliana. Good afternoon.
Good afternoon, Innie.
Yeah, so I know you talked about this with Laddie during Business Morning, but it would be interesting to know if this knowledge, the figure, if it has changed anything. Are there reactions trailing the inflation figures? Or, I mean, this is just confirming what we already know.
I think it's all of the above, Vinny, but certainly confirming what we already know. And unfortunately for Brits, it's due to get worse because we haven't seen a rise in energy bills as of yet. That's coming in April, and also that comes along with a rise in national insurance. So it's pretty dire. Earlier this morning, the Office for National Statistics released inflation data for the month of January, showing that prices year on year have climbed 5.5%. Now, this is the fourth time that the CPI has come above 5%. And if you think of what the benchmark figure is supposed to be, it's 2%. So it's well above that. Also, as well, economists at the Bank of England, who, of course, get a much more forensic look at the data, they believe that inflation is actually probably running by about 7%, and it is likely to get worse. Going back to January's data, the upshift has really been pushed by retail, footwear and clothing. That's because typically in this country in January, lots of retailers are slashing prices to try and get rid of Christmas goods. They didn't do that this year because we know that 5 million people were asked to work from home. So where typically people would use their lunch and after work to go and shop, they were not doing that. So retailers were really hit hard. They didn't put prices down, which is why we're seeing such a surge.
And how is the market reacting to this?
Not great. We had a pretty subdued start this morning. As you said, investors appeared to breathe a sigh of relief because it appeared that an imminent conflict between Russia and NATO allies was waning. So we did see some travel and leisure-related stocks rise. BA owner IAG, their shares were up by about 2.2%, followed by Wizz Air, Jet2 Holidays and TUI. But it's since collapsed. Those gains have been lost, and that's mainly over fears of inflation, which is piling on the pressure for the Bank of England to raise interest rates. The FTSE All-Share is down at intraday by 0.20%. The FTSE 100 is also down by 0.25%, and the FTSE 250 slightly up by 0.04%. In the currencies market, the British pound is up on the US dollar by 0.20%, also up on the euro by 0.05%, and up on the Japanese yen at intraday by 0.25% in A.
All right, Juliana, you did talk about the Russia and Ukraine issue. We seem to be having conflicting signals about that. Yesterday, Russia came to say, oh, it was just a training, and they are leaving the borders. I think the U.S. is saying that's not really the picture. Do you have any update on that?
Well, yeah, no surprises that when there's a drumbeat of war, there are conflicting messages on both sides. Russia appear to suggest that they have de-escalated the situation by removing troops on the border. And we've heard from Ben Wallace, who's the UK Defence Secretary. He appears to believe otherwise. Jens Stoltenberg also has been speaking. He heads up NATO. According to their intelligence, they still see a significant presence on the border. The last time I checked, they said about 60% of Russian troops are still there. They also have very sophisticated weaponry. They have warships and missile ships on the sea close to Ukraine. So, of course, from the Ukrainian perspective, it's still very, very scary. But China have spoken earlier today. They were pretty much on the Russian side, saying that Western propaganda, yet again, is fueling this drumbeat of war. So we'll have to wait and see. I think NATO, the EU, the UK, the US, they're all talking very, very tough. And I suspect they have to do that until they see a significant presence being removed from the border. As of yet, it only appears that 60% has left, but some would say that that's an olive branch being handed over to them by Putin.
Well, that's another space we're going to be watching. At least we'll see how Wednesday ends following the news we heard before. Now, thank you so much, Juliana. Enjoy the rest of your day.
Thank you. Thanks, Annie.
Let's move to the U.S. now. Stock index futures edged lower earlier today after registering gains the previous day amid signs of tensions easing between Russia and Ukraine. Futures contracts tied to the Dow Jones Industrial Average slipped. S&P futures also fell, and Nasdaq 100 was also down. But we have details of how the market went yesterday. Maria Bird, our correspondent in Washington, tells us how the market ended yesterday.
The U.S. stock market rose on Tuesday, ending a three-day losing streak. The Dow Jones was up 1.22%, the S&P 500 up by 1.58%, and the Nasdaq rose by 2.53%. It is clear that investors are hopeful for the future, and inflation is not a major concern. It is also clear that investors are looking at the challenges with the supply chain not having the same impact as it did earlier in the pandemic season. Despite the Ukraine-Russia tension, it seems as if the U.S. stock market is still on the way up.
Oh, thank you so much, Maria. Well, talking about the U.S. now, the Deputy Assistant Secretary of the Bureau of African Affairs, Kuna Cook, is in Nigeria to promote the U.S. Prosper Africa initiative. The initiative is another effort by the United States government to ease African investors' access to the U.S. market and encourage more U.S. companies to invest in Africa. From Nigeria, Ms. Cook will head to Kenya, South Africa, and Namibia as part of her tour.
The campaign is focused on improving investments, particularly in companies and entrepreneurial ventures by diaspora, women and small and medium-sized enterprises. It is two-way trade and investment, so we are also focused on improving and working with African-owned businesses, and particularly those owned by women, small businesses, and so really trying to leverage all of the resources of the United States government across the 17 agencies that make up Prosper Africa to ensure that we see the kinds of investments investments into Africa's young people, into Africa's women, and into the many wonderful opportunities that exist here on the continent. The United States recognizes the enormous potential in a number of growing industries, including the creative sector right here in Nigeria, where we see great strides and potential as an economic driver in the arts, including film, music. We see tremendous opportunity in the digital and technology fields, particularly given how young, bright, and innovative young people here in Nigeria and across the continent are. So we know that we have to get in now, and we have to make sure that we're driving these investments to make sure that we're part of Africa's future.
Well, with that, we'll take a break, but when we come back, we'll stay in Nigeria, looking at the scarcity of petrol, which major cities, residents in major cities are facing. It's Business Incorporated on Channels Television. Yeah, welcome back. You're still watching Business Incorporated on Channels Television. Now, well, looking at what's happening in Nigeria now, it's been over a week since the news of adulterated petroleum PMS, popularly called petrol, broke into the news space, and long queues, locked up filling stations are still the order of the day in major cities of the country. Well, the spillover effect is not lost on businesses. That's why we're speaking with the Chief Executive Officer of Aaron NG Limited, Seun Oyewole, to share with us how this is affecting his business so far. Well, good to speak with you, Seun. Good afternoon.
Thank you.
So,
thank you for having me.
Yeah, you are in the logistics, always on the road. Give us the update. What's the situation now? Is the queues easing off? Are they selling? What's going on?
Well, the situation, to be honest, is critical, and it's critical, and we cannot underestimate the effect on our business. And I must be honest with you that. And now the situation even came at a time we didn't prepare for. It came unexpectedly. Now, if it is something that, that we, for instance, when there were speculations that there were going to be fuel increase, or going to remove subsidy, one could have prepared ahead for that. But in a situation where we just suddenly woke up one day and we heard that there is an adulterated fuel PMS that was imported into the country, and that in itself was not something any business, we didn't prepare for that. And so the effect on us is, it's critical. It's been very tough. We've had to shut down operation in some of our locations across Southwest just because we can't cope. So the only place where we manage to even still run business as we speak is just Lagos and then Ogun. But some other station where our drivers could not get fuel, we had to shut down operation, and it's quite a sad thing.
Yeah. So we also hear of issues of price hike, some in the black market, some unofficially. How is that going? Have you been buying at higher price when you are able to manage to get any?
Oh, definitely. We all know that is unavoidable. As at yesterday, my staff, they bought fuel at a particular station for about 220. They told me, one of our drivers, bought fuel because they were stuck on the road and there's nothing they could do. So they just had to get the fuel at that price. And they even told me that before they could even buy at 220, before they could buy at 220 at the pump, that they had to even, in a way, tip some of the people who were guarding the filling station. So it's not a problem. It's not something that that one can cover up in any way. We've been buying at a very high price, even within Lagos. So it's just what it is.
So in your line of business, how easy is it for you to pass? Because we know, of course, the consumer or your clients, the customers pay for it at the end of the day. How easy is it for you to pass this bulk to, the extra cost to your customers?
All right, thank you. Now, for my business, we have two sides to my business. we partner some corporate organizations like the e-commerce, the notable e-commerce businesses in Nigeria, the likes of Jumia and Konga. We partner those ones on one hand, where they are last mile delivery service for them. Now, it is not easy to immediately pass on the cost to them because there has been a contract in place that is not less than 1 year duration. So it's not easy for us to quickly pass on the cost to this corporate institution. However, for the individual, on another hand, hey, it's just immediate. You either agree to our pricing or not, to the rate or not. So it's easy for us to do with individual and small businesses, who will just have on-demand services. It's easy for us to pass on the pricing to them, the hike in price of oil to this world. But then for the corporate institutions, like I said earlier on, those ones are things we're still trying to see how to bring them to the table to discuss the issue as it is. So it's not easy on the other hand, on the side of those work.
Yeah, well, obviously, what we see is it's a cycle. So if you have to pay more to get the services done, of course, you pass it, and then a trader will pass it to the food items, and then we're talking of inflation. Thank you so much, Sheon, for giving us update on what's going on in that space. Sheon Oyewole is the Chief Executive Officer of Aaron.ng Limited. Enjoy the rest of your day.
Thank you very much. Thank you for having me here. Bye.
Good to have you. Let's go to Zimbabwe now, where the country has ordered the reopening of all ports of entry with immediate effect as coronavirus cases in the country continue to decline. Travelers will be required to present a valid negative coronavirus test that's not more than 48 hours old to enter the country. Meanwhile, the government has said that it will stop paying salaries of staff who are unvaccinated against COVID-19, while ordering those who have received jabs to report for work at their offices with immediate effect after more than a year of most government employees working from home. The Southern African country has in recent weeks relaxed restrictions on public gatherings as cases of Omicron variant appear to have started receding. In Egypt now, the government has approved a proposal made by the Ministry of Public Business Sector, putting the minimum wage workers in affiliation companies at £2,700 per month. The decision put workers of firms of the public and business sectors on an equal footing with civil servants at the administrative body. This is the first time the public business sector workers have received a minimum wage allotted for civil servants. And Liberia will be taking lessons from Ghana and Ivory Coast in developing a sustainable cocoa sector. Though the economy has been dominated by rubber plantations and large farms, cocoa has been identified as national priority for export diversification and highlighted in the Liberia National Export Strategy of 2014 to 2018. However, the challenges in the country's cocoa sector, including underdeveloped value chain, including old and diseased trees, lack of input, poor fermentation techniques, limited financing, high labor costs, lack of drying, packaging and drying techniques, and the African Center for Economic Transformation and USAID initiated a dialogue on regional collaboration and overcoming binding constraints on the growth of the country's cocoa value chain. That's it on the program today. Thank you so much for being a part of it. I'm Ini John Mekwa.